Good morning. Welcome to the latest webinar in the Mobility Ways Thought Leaders series. We are going to be beginning shortly, but we're just going to give another 30 seconds or so for people to join. So please get yourselves comfortable and we'll start momentarily. So, hello again, and welcome to the latest webinar in the Mobility Ways Thought Leaders series, which today is called CSRD Compliance and Beyond Accelerating ESG Transformation. And this webinar is brought to you by Capgemini in collaboration with Mobility Ways. And in today's session, we will learn how to navigate CSRD regulation, driving transparency and sustainable growth with focus on data-driven CSRD reporting. And by the end of today's session, we'll aim to have given you an overview of CSRD, the omnibus package and its key implications. Look at the role of data and technology to accelerate CSRD implementation, a practitioner's approach to CSRD, and some walk-through case studies on CSRD implementation with practical insights derived from Capgemini's key client experiences. So a bit of housekeeping before we begin. So this is an extended session today of 2 hours. So we'll aim to have you wrapped up for lunchtime at midday. And the format is going to be 3 presentations from our guests, who I'll introduce shortly. And we're going to have 2 Q&A sessions today. So the first will be around 11 a.m., 11:10, and the second will conclude this webinar just before midday. And we would encourage your participation. You'll see on your screens that there is a Q&A box along with a chat box. So if you have questions throughout the day, please add those in the Q&A tab, and we will get through as many of those as we can in our 2 Q&A sessions. Now, important, this session is interactive, and today we're using Slido and would politely request everyone to take part. If you're using the app version of Zoom, then you should see Slido pop up to the right of your screen. If not, then on the mega menu at the bottom, you should see an apps icon. If you click that, Slido should appear. If you can't see that, it is the apps icon can be found under the More tab. For those of you using the desktop version of Zoom, there is a link to Slido within the chat box, which you can see popping up now. And so we just politely request if you can click on that, and we'd love for you to participate. So for those of you who've just joined us, you're watching CSRD Compliance and Beyond. And today we are joined by 3 guests. And I'll hand over shortly to Pranav Phadke, who's Global Program Manager, Sustainable Futures, and Global Officer at Capgemini Invent. And he specializes in topics like ESG reporting, sustainability strategy, data-driven sustainability transformation. And Pranav has supported various global organizations in transforming their ESG reporting journey to drive sustainable business value beyond compliance. We're also joined by Marie-Therese Schritzelberger, who's Senior Manager for Sustainable Futures. Strong focus on ESG regulations, CSRD, ESRS, EU taxonomy, EUDR, climate risk management, and the implementation of audit-compliant data-related control processes. She also supports clients across industries in ESG transformation based on her audit and consulting experience. And with in-depth knowledge of CSRD, ESRS requirements, she supports clients in the preparation and implementation of those requirements. And then last but not least, we've got Pallavi Roy, and Pallavi is Sustainability Manager specializing in ESG regulations, climate risk management, and data-driven ESG reporting solutions. And Pallavi helps clients across industries navigate ESG reporting requirements and optimize their ESG reporting models. Pallavi has deep expertise in ESG frameworks and operational strategy and supports organizations in accelerating their ESG transformation. So great lineup for you today. And without further ado, I would like to hand over to Pranav. Pranav, it's a pleasure to have you with us. Over to you.
Thanks, Finn. Thank you for handing it over. Hello, everyone. Welcome to our webinar on CSRD and then data transformation. So we have a packed agenda for you today. Yes, so we have a very packed agenda for you today. We will be we'll start with a quick refresher on CSRD and ESRS, although most of you would already be aware about these regulations, but it's important to understand what are the tenets that we are covering here. Then we will be focusing on the critical topic of the day, which is the omnibus package, where we will demystify it, discuss what are the changes that are coming in because of this in the EU CSRD. We will also take a quick pause after this first two sections to have a Q&A, first session of Q&A, where if you have any questions throughout, you can post it in the chat and we'll be happy to take it up during the Q&A section. There are also people from the team who will be from the Capgemini team who will be answering any questions which we may not be able to answer throughout the sessions. Finally, moving on to the third section, we'll be talking about a practitioner's approach to CSRD, where we will leverage our strong experience of supporting clients across EU, UK on navigating CSRD reporting. We'll be briefly discussing about our approach of our key frameworks to help you get started on the CSRD reporting. And finally, in section 4, basically, we will move a little bit beyond reporting, because reporting is just one aspect around sustainability. So here we will expand a little bit on how integrated ESG data and AI can help companies in unlocking a full true potential of sustainability transformation. And finally, we will cover practical key case studies to show in action how all of these components around CSRD, Omnibus, even ESG data and AI transformation, how all of this fit in together to bring value for our clients through some practical key case studies. And finally, we'll wrap the whole session with some key takeaways to summarize the whole webinar. And as I mentioned, don't worry, we want to keep it very interactive. So there will be frequent touch points. Q&A sections will be along the way. So if you have any questions, feel free to type them in the chat or you can ask them later. Perfect. So let's get started with the first section, which is around overview of CSRD and ESRS. Basically, CSRD, as most of you are already been knowing, stands for Corporate Sustainability Reporting Directive, which improves upon and replaces the existing, which was previously non-financial reporting directive, which is NFRD. As you can see, it has been a very long journey in the making, because the discussions for CSRD began in 2021. So it has been a long way in coming. So in 2022, basically EFRAG, or European Financial Reporting Advisory Group, released European Sustainability Reporting Standards, or ESRS, which are essentially guiding principles, standards, and frameworks on how to implement the CSRD directive, the regulation. Then in 2023, the European Commission adopted these 12 ESRS standards. Among these 12, there are 2 cross-cutting standards, which are applicable for everyone, and we'll be taking a deeper look on these. And then there are 10 topical ESG standards. And finally, starting from this year onwards, we saw first set of CSRD reports that are being published, particularly by large companies, which were previously subject to NFRD regulation. And they are starting the reporting based on the 2024 data. And so CSRD applies to a drastically larger scope of companies, expanding it beyond NFRD and this will have an impact on various on businesses around affecting their own businesses, how risk and opportunities businesses are accounting for this, and what is the impact that people and environment have on businesses as well. Moving on, so let's understand quickly what do we mean by the ESRS standards. So under the CSRD regulation, the European Commission had released these 12 European Sustainability Reporting Standards in 2023, in July 2023, which were developed by EFRAG. These include, basically on the left side of the screen, you can see true cross-cutting standards, which includes ESRS1, general requirements, which basically provide general provisions on how to report in accordance with the CSRD directive, so that you comply with this regulation. And another key aspect of CSRD, which is double materiality assessment. So this critical information is covered in ESRS1 package. Then there is the ESRS2, which is the general disclosures. Here, there are 4 reporting areas. Companies need to report on with the strategy around sustainability, governance, what are the sustainability impact, risk and opportunities, or IROs, call them, and finally, data around metrics and targets that they are implementing. So these are cross-cutting standards applicable for all. And finally, on the right side of the screen, you can see there are 10 topical standards, which are segregated across environment, social, and governance. The applicability of these topical standards will depend on a company's materiality assessment, which we saw. Critical aspect of CSRD, which is the double materiality assessment. So depending on that exercise, companies need to understand and identify and report on which among these topical standards are material for the company, and then publish those reports. Moving on with the implementation timeline. Now, although CSRD had a fast approaching timeline, we will be seeing that the omnibus package, which we'll be exploring in the next section, will have an impact on the timeline, especially for the Wave 2 and Wave 3 companies, and overall applicability. However, just to understand what was the previous timeline, we are covering this. So although CSRD had a very fast approaching timeline, it was already planned in a staggered way to allow businesses, especially the smaller ones, to adapt to the new and more comprehensive sustainability reporting requirements and ensure a smoother transition. So as you can see on the slide, companies which were already subject to NFRD, they have to start reporting and start publishing the first reports in 2025 based on the 2024 data. Then we have Wave 2 companies and Wave 3 companies, which are other large undertakings and SMEs, which were expected to report. The criteria for them are, these are large listed entities in EU or subsidiaries of those entities and non-EU firms, which should be meeting 2 out of the 3 criteria, which is greater than 250 employees, turnover greater than 40 million euros, and assets greater than 20 million euros. They were expected to publish their CSRD report next year in 2026 based on 2025 data. But as we will be discussing shortly, the recent omnibus package will have an impact on these timelines for these Wave 2 and Wave 3 companies. And finally, there are the Wave 4 companies, which are non-EU entities. These entities will have to report as per this timeline in 2029 based on the 2028 data. So those were the timelines for CSRD, and there are some key requirements which companies have to focus on to ensure compliance with the CSRD. So in CSRD, the sustainability reporting follows the main aspect would be the increased perimeter of reporting. So the reporting follows the same boundary as a financial reporting, meaning that the company and its consolidated entities are also covered. So this will mean the company, the subsidiaries, those aspects. And CSRD even goes beyond this, even requiring companies to also report on their impact across the value chain, including their suppliers, customers. So one key aspect of CSRD is increased perimeter of reporting. Second key aspect is the double materiality assessment, which recognizes and understands that the companies impact on the environment and society is material to its financial performance. And so it requires companies to disclose not only how the sustainability issues impact them, which is the financial materiality, how the companies will be financially impacted by various material issues, but also how their operations and activities will affect the environment and society at large. Finally, there are aspects around verifying the accuracy of these reports that companies will be putting out there, verifying the accuracy, integrity of these through external assurances, the integration of sustainability report more closely with the financial report, which aims to standardize the whole sustainability reporting process. And finally, XBRL tagging, which basically facilitated a lot of data angle around this ESG, so that investors, regulators can have machine readable business reporting, making it easier to digitally verify, compare data across different companies. So that's the main key requirements around CSRD. And organizations need to consider several parameters, right? From what is the scope that they should cover for this CSRD reporting, what is the timeline, which phase of CSRD reporting exactly they are applicable for. Is it wave 1, wave 2, when to start the reporting? Sector specific requirements, especially considering it for materiality assessment, which topics from your specific industry or sector you need to report on. And finally, there is risk around non-compliance. Basically, non-compliance, especially will be because these regulations will be included in country-specific laws. So non-complying to these mandatory directives will have a risk around this. So that's the overview of CSRD that we quickly discussed. Moving on to the key topic of today, which is what is being changing, what is the aspects around this in the latest omnibus package. So omnibus package has been also long being discussed. The seeds of it we can find in EU Green Deal, which started in December 2019, which is EU's climate plan to become carbon neutral by 2050. Then came a lot of other regulations, which companies are recently focusing on, like the EU taxonomy in 2020, the CSRD, which came in 2023, the CBAM or carbon border adjustment mechanism, which is carbon tax on imports to cut emissions, which came in 2023, the CSRD around due diligence, which is corporate sustainability due diligence directive, which came into force in 2024. And you can see there has been a lot of these regulations which came up, and there was also a need for to make an assessment to analyze what are the main challenges which various EU entities are facing and EU businesses are facing in the global environment. And that's when an interesting report around Draghi report got published. The objective of this was to understand what are the critical challenges that EU businesses, especially the small businesses, are facing, and how to mitigate those challenges. And you can trace the omnibus package to this Draghi report as well. So Draghi report came in September 2024, and immediately, very soon after this, in November 2024, the EU announced omnibus directive to reduce the reporting requirements. Another key outcomes of the Draghi report has been the competitiveness compass, which is a EU's 5-year strategy ranging from 2025 to 2029 to focus on how to promote growth and competitiveness among companies in EU. And out of this, this competitiveness compass, they have come up with various action plans. There are many action plans to help support businesses to stay competitive in the global environment. And one such package has been the omnibus proposal, which came very recently, months back in February 2025, to focus on reducing the requirements, sort of timelines, adjusting timelines for companies. A key part of this omnibus package is the stop the clock proposal, which recently got approved just this month by the EU Parliament. The proposal still requires a final legal text before the final adoption. And once adopted, EU member states will have until 31st December 2025 to transpose it into their national laws. That's when it will be become law within these countries. So as you can see, the omnibus proposal is aimed at streamlining this, and we will be diving deeper into this specific aspect of omnibus package. So, as I mentioned, in February, the EU Commission released its amendments to the existing regulations of CSRD, CSDDD, EU taxonomy, and CBAM. And as part of this Omnibus Package 1, Omnibus 1, we have 3 proposals. The first proposal is stop the clock proposal to delay the timelines for CSRD, CSDDD. The second proposal is the content proposal for CSRD, CSDDD, and EU taxonomy. And the third one is simplification proposal for carbon border adjustment mechanism. So these are the 3 main packages introduced as part of Omnibus 1. And what is the main objective of introducing these packages is the biggest objective is reducing the administrative burden of these regulatory reportings. So the first objective is to harmonize and align these different pieces of legislation to talk to each other so that there is some standardization and consistency and harmonization between all these different pieces of regulation to seamlessly work together. The second one is the simplification. So to make EU laws simpler, and easier to also implement, comply. So we simplify the compliance for the companies as well as for the regulators to enforce them. The third is improving the efficiency, so streamlining the whole regulatory processes, moving towards ease of business. And finally, the consistency, ensuring all the member states across the EU, implement in a uniform manner these regulations and laws. So there is consistency across different countries within EU. And this omnibus proposal will go through the typical EU lawmaking process involving both the European Parliament, the EU Council for reviews, and if approved, it will become a directive, then requiring a transposition into a national law by individual EU member states. We will be quickly zooming into both these proposals, which is stop the clock proposal and the content proposal soon. So let's dive a bit deeper into what do we mean by stop the clock proposal, which is the deadline for extension of CSRD. So as part of this proposal, 2 documents are amended, which is CSRD and CSDDD, by extending the reporting deadlines for the companies. So as you can see, it is proposed to extend the deadlines specifically for Wave 2 and Wave 3 companies by 2 years for the CSRD. We can see that previously the deadlines for other large undertakings was 2025, based on 2025 data to report in 2026. But now, based on the omnibus package, that has been pushed back to the reporting can start in 2028 based on the 2027 data. And similar is the case for small, medium enterprises and other institutions. For Wave 1 companies, which were already subjected to NFRD regulations, they are already publishing their report, which came out this year based on the last year's data, 2025, and they continue publishing these reports next year as well. And for the non-EU companies, the reporting timelines also are not addressed in the proposal at this stage, which is the publication year remains 2029 based on 2028 data. And this stop the clock proposal is, as I mentioned, already approved by EU Parliament on 3rd April. Once the legal text is finalized, it will be adopted by member states, and then these timelines will be finalized and adopted by embraced in the national law in by 31st December 2025. Let's take a quick look at also the content proposal. Here is where some things change within the CSRD as well. So the second zoom is on the content. There are some amendments to the CSRD within this. The first biggest amendment is the number of companies concerned may reduce. After the omnibus package is adopted, only companies with 1,000+ employees, either with a turnover exceeding of 50 million euros or a balance sheet of 25 million, will now have to comply with this regulation. The second biggest change would be voluntary reporting is more in focus for non-applicable companies. So companies which will not be affected by CSRD thresholds will be able to report their information on a voluntary basis based on the framework developed by EFRAG. The third aspect is the data collection requirements on value chain may reduce. Some of these VSMEs mentioned above will prevent large companies and banks affected by CSRD from demanding excessive information from a lot of smaller supply chain entities, value chain entities and players. The fourth biggest change is the ESRS standards are to be lightened. And previously, there was a talk of having sectoral standards, which the plan is those might be eliminated. So EU Commission has already asked EFRAG to fast track the development of a simplified CSRD reporting standard and share this first advice before 31st October 2025. By that time, it will be much more clear how the ESRS standards are getting lightened and what are the changes that are upcoming, exact changes that are coming in. And finally, the fifth one is the plan is to make assurance requirements also a bit easier. So the CSRD will maintain a limited assurance requirement, but it eliminates the target to move to a mandatory reasonable assurance, which is a stricter financial audit kind of an assurance. So this is still being discussed and are being deliberated within by different agencies. So the content proposal is still being discussed and will be tabled soon by second half of the year. Now, what will be the potential impact of this omnibus proposal on CSRD based on different company size or listings? So just to quickly summarize what exactly will change for different types of entities. So as you can see, the companies with greater than 1,000 employees, these are listed companies with more than 1,000 employees. They will have to continue publishing the CSRD report. Most of them have already published a CSRD report in 2025 based on 2024 data. So there will be no impact on the stop the clock proposal. There might be some changes based on simplified ESRS proposals, which might come, but more of this will be clear during the second half of the year. For non-listed entities with more than 1,000 employees, these companies must have already started working on the drafting of CSRD report for 2026. These companies will get additional time based on the stop the clock proposal. So they have to report now in 2028 based on 2027 data. So they will get a 2-year buffer. These are non-listed entities, large entities. And they will have a simplified ESRS. Again, these might be applicable for them as well. More of this will be clear later. On the other side, there are companies with less than 1,000 employees. Of course, this is in consideration of other criteria that we discussed around the turnover and the revenues, those criteria. So companies with less than 1,000 employees, these are listed companies with more than 500 but less than 1,000 employees. They must have already published a CSRD report or about to publish in 2025. The stop the clock proposal will not have a significant impact, and but based on the content proposal, there will be no mandatory CSRD reporting that might be needed. Again, much more of this will be clear once the content proposal is passed and is discussed in the parliament. So what is broadly the main messaging is the large companies, they need to focus on streamlining the CSRD reporting. The focus should be on streamlining CSRD reporting, reducing the cost of compliance. For the non-listed companies with more than 1,000 employees, the focus should be to start early, not wait for 2 more years, but to start early, to start simplifying for the future CSRD compliance. For smaller entities, less than 1,000 employees and meeting other thresholds, voluntary reporting builds a lot of strength and trust and helps companies be more competitive. with the available data, and this data can be merged with a lot of business objectives and strategy. So for smaller entities, the focus should be to publish voluntarily to build trust with your stakeholders and to stay updated with the whole omnibus package, and to stay updated with the decision making and how it moves through the parliaments. Yes, we'll take a quick pause with this if there are any questions in the chat.
Yeah, and yeah, I can't. There we go. My I think the host should be starting my video shortly. Perfect. So we do thank you ever so much. Really insightful, Pranav. We have got a few questions in here. Just a reminder to everybody, there's a Q&A tab at the bottom of the screen. If you have got any questions at this stage on anything, then please do add those in the Q&A. If we can't get through those now, then there is that second session coming up towards the end of the webinar. So just going in order, we do have a question here from Marta Fernandez. So the question is that the EFRAG or EFRAG recently announced the launch of a public call for input on ESRS Set 1 revision. So the question here is Capgemini planning on general company proposals for feedback on that matter?
Yeah, so we might take a look at that depending on if they, of course, we are taking a look and we'll be participating in the public call for inputs. So we'll of course take a look at that and provide our inputs on how this can be further streamlined and focused. Yes.
Yes, thank you. So just moving down, then we've got Robbie Leeson, who's asked why there are multiple proposals here.
Yes, so within Omnibus also, as you can see, there are multiple regulations. So there is CSRD, which is around reporting. There is CSRD, which is around due diligence or supply chain. There is a border adjustment mechanism related to carbon, which is impacting more on steel and these large sectors. So depending on these sectors, there are different regulations that are out there. And this is also the question why the omnibus package is being focused, because there are these multiple regulations that are not essentially always talking to each other and are not seamless in being integrated. So that's why this one of the key objectives of this omnibus proposal is to streamline these multiple proposals and bring them into the same discussion tab. And within the omnibus also, I'm not sure if the question is on those overall regulations, or within the omnibus also there are these three different packages. So within omnibus also, the reason that there are these three different packages is the focus was on the stop the clock proposal, so that the timelines, there is a lot more clarity because the next set of companies will soon start reporting. So at the top, the focus was to get clarity if they have to report or not. And if the timelines are to be pushed by 2 years, then that decision is paramount. So that package was launched earlier, and then the more discussions and deliberations, as Martha also pointed out, around how to reduce the scope of ESRS, what exactly the criteria that companies should report on, what are the data, KPIs. These things will need more deliberations. So that will come in later.
Sure, and I mean, my understanding was some of this stop the clock proposals are actually a result of the double materiality and the level of reporting. Is it? Can you expand on that and the significance of that?
Yes, so double materiality is the main essence of CSRD, which still continues to stay and continues to remain even as of now with the stop the clock or other proposals. Double materiality is just that companies need to understand what is the financial impact of different environmental or social topics on their companies. For example, increase in raw material prices will have an impact on companies. So this is an environmental issue which will have a financial impact on the company's bottom lines. So companies need to assess that financial impact. At the same time, they need to understand the impact materiality, which is what is the impact of the company on the environment or society. They may be mining a lot, they may be pollutions or around social aspects also. So what is the impact that a company is doing on the environment? So the double materiality essentially talks about companies need to focus more on assessing and quantifying these impacts so that they build resilience around this.
Thank you, Pranav. Brilliant. There are a few more. I believe we've got time for a few more. So there's a couple of questions that I noticed really about I suppose the impact on the UK. So it would be great if you could just give some insight on not only current UK operations or organisations, either listed or with significant sales in EU markets, but also perhaps those who aren't, and where the UK is relative to. Yeah, sure.
So the UK government, so UK has a similar thing for as CSRD, which is the Sustainability Disclosure Standard, UK SDS. So the UK government plans to assess this and endorse the ISSB, which is the International Sustainability Standards Board, to disclose the standards in the form of UK SDS. And the government intends to make the UK SDS available in early 2025. So there are still discussions ongoing on this SDS, and they will decide on this endorsement for this by mid of 2025. So if endorsed, the Financial Conduct Authority of UK, FCA, is expected to mandate UK listed companies to report on sustainability information starting from January 2026 based on 2025 data this year, so next year. But this is still being discussed, and if endorsed or not, those discussions are being happening, and much more will be clear by mid of 2025 on this.
Splendid, thank you. We've got a few more questions. So kind of going back to the order then. So there's a few here around companies who don't cover, who are kind of in the third or fourth waves. So for instance, what happens if you're in a company under 1,000 employees, but you meet the other criteria? So is that piece critical, or could you only meet two of the other three criteria, for instance?
Yes. So the criteria, as I mentioned, was around the turnover as well as just check the criteria just a bit. So companies with 1,000 plus employees, either with a turnover exceeding 50 million euros or a balance sheet of 25 million, need to know. So either of these two. So one requirement is companies should have 1,000 plus employees, and then either a turnover of 50 million or a balance sheet of 25 million.
So that, I think that was probably for wave 2, 3, 4 companies. But if you were a wave 1 company with less than, well, actually, so wave 1 with less than 1,000 employees, that would, yeah. So they don't need to submit a CSRD report mandatorily, but can adopt the VSME standard for 26 based on a 25 report.
Yeah, so as per the current regulation and the content plan, which is yet to be published, where these details around applicability are, then yes. And again, this will be very case by case basis. So every company needs to assess, as I mentioned also in the slides, need to assess the scope, the applicability, when the waves will start, based on this to identify whether exactly they are applicable and their subsidiaries are applicable for exemptions.
We've got to just trying to keep with the same thread of questions. There are some more coming in around. So this is a company affected by the second wave omnibus, and they said they're not sure if they'll need to prepare consolidated CSRD reports with omnibus. If they take revenue by legal entity for the country and scope, will they be required based on where the customer is located, or they're not required? Yeah. Do you know what the definition of revenue will be used in the simplified framework?
Yeah, so we get these questions a lot by our clients, and again, as I mentioned, these are very case-specific requirements. So we'll really have to understand what are the applicabilities, what is the scope and boundary of the company to really advise on whether it's applicable or not.
Absolutely.
So
Well,
it
for
really
anyone who
depends.
wants to get in touch with you, by all means, it'd be, we can share everything after this, and your details will be on the slides.
Yeah, I just saw another question which was by Haley Phillip, which is there a baseline year that is taken into account? So just wanted to say the baseline year is the previous year. So if, for example, right now large companies are reporting in 2025 based on the 2024 data. So the baseline would be 2024.
Terrific. We've got probably a couple more minutes before we go into the next section. So just if you wouldn't mind just recapping what CSRD is again, if you could give a bit more of a simplified overview of that, would be terrific.
Yes. So CSRD is the due diligence framework, which is requiring companies to have a visibility of their supply chain. So these are large companies which are having and which are focusing on the entire value chain of they have a large value chains across different geographies, have tier 1 suppliers, tier 2 suppliers from where they are procuring their materials and then building finished goods. So CSRD is applicable for this value chain where large suppliers need to collect data as part of the CSRD regulation, ask these questions around what are the sustainability practices undertaken by their tier 1 suppliers, by their tier 2 suppliers, and report this to the regulators. This is with the aim of promoting sustainability even for smaller organizations. Across the value chain. So that's the main focus for this CSRD.
Marvelous. So are there any is there further information just kind of following on from that about the deadlines for this CSRD reporting?
Yes, so CSRD is also part of the Stop the Clock proposal. We can share more details around that as well. The focus was more on CSRD, so that's why we focused right now more on what are the changes coming into Wave 2, Wave 3, and other companies. But we'll be happy to share more details on CSRD as well, which is also part of the Stop the Clock package of Omnibus.
Right, I'm going to ask just one more question from Tor Rosa here, which I suppose just given a lot of the market volatility and everything that's going on in the outside world at the moment, I mean, this kind of blends into one larger question. But Tor says that market pressures still exist despite Stop the Clock, and smaller companies like manufacturing SMEs, for instance, are ill-prepared and quite overburdened with some of the reporting requirements, whether it's voluntary or mandatory. And that kind of hinders their adoption and risks them missing out on sustainability-driven business growth. And I suppose more broadly, particularly the financial aspects of the implications around everything that's going on at the moment. I'm just wondering what your thoughts and comments are both on that in terms of the timelines, but also what support is available for organizations that feel they need it.
Yeah, so we will be covering a lot more of this in detail in the next few sections, which is the practitioner's guide and how data and AI will help in leveraging this. But just to cover this, the true potential of sustainability will be realized with when the focus is a lot more on an overall operating model focus, which is talking about not just from an IT perspective or not just from a compliance point of view, but from a more people, process, data, technology, when these things are coming together to merge with the business problems or business statements. So sustainability can have a stronger impact on in terms of reducing the compliance cost, in terms of improving the revenues, access to more markets, getting materials cheaper. But all of this will be exponential, and real benefits and tangible benefits can be visible when you have also the data systems that, because a lot of organizations are now interconnected, as we are seeing, across a lot of supply chains, across a lot of geographies. So the real essence is on this exponential data availability, that once we are having these aspects, then they will be able to implement it. And there are supports available as well. So one example would be this data, these operating model areas and systems, which are more internal. But then there is also a focus from external point of view, which is an omnibus package would be one such example where, as I mentioned, it's the outcome of it is from the Draghi report, which was to increase the competitiveness of EU companies, to reduce the regulatory burden, etc. So there is external support also coming in and is being focused. But there are a lot of things that companies should also do internally to unlock the value of sustainability as well.
Marvelous. Thank you, Pranav. So, well, I think as you mentioned there, some of the additional details going to be provided in these next two sessions. And so I think maybe a good time to hand back to you guys now. And actually a number of these questions may well then get answered in those following sessions. But as a reminder, we do have Q&A towards the end. So anything not answered, we will get those questions to the team in our second Q&A. And just a reminder, please do use that chat box throughout. Okay.
Hello, everyone. So I think we also have a Slido here where we would like to understand, regarding the data maturity of the organizations, where you're at in your journey. So if you can kindly take a few minutes and answer those questions, that will be really great. Maybe I can wait for 2 minutes, maybe for you to take to go through the question and answer, and then we can get started with the next section.
Just as a reminder, guys, if you can't find Slido, it should be popped up on the right hand of your screen. If you can't see it, please pop to the apps icon on the bottom of your screen to the right. If you can't see apps, then click the ellipses and it will be app should be available under that. And if you're on the desktop version, if you go to the chat icon at the bottom of your screen, you'll see a link to a web version of Slido. So please click that.
Okay, then, and then rest of everybody's time. So maybe we can quickly dive into the next section, which is on the practitioner's approach to CSRD. So, so now that we understand a little bit more about CSRD and the overall impact of the omnibus package, let's start with understanding the key trends that have emerged out of CSRD publications that have taken place till now. So we see that companies are increasingly integrating CSRD compliance into their business strategy, and transforming it from a regulatory task into a decision-making tool. That's what, based on the understandings and key points from the existing CSRD reports, which have been already published, we were able to extract a few key trends and key areas that the companies are currently focusing on. So quickly, we wanted to dive into those particular areas where the companies are currently focusing on when they are publishing the CSRD reports. So some of the key emerging trends in the CSRD, reports that we currently see is that companies are increasingly focusing on, increasing the transparency across their value chain. Companies are engaging with their suppliers, customers, as well as they are trying to enrich their data from their own operations to increase the overall coverage and overall data quality across their value chain. Another point which actually has is that we see currently is also around the fact that CSRD also provides phase-in disclosures. Companies are making use of that, and companies are also using gap assessments to identify key areas that they need to focus on, and then strategically ramping up their disclosures in alignment with the CSRD requirements. Given that CSRD is of utmost importance at this point of time, companies are also focusing a lot on evidence-based double materiality assessments. So companies have been accessing internal data, have been reaching out to third-party data sources, as well as integrating stakeholder inputs to make a more comprehensive and evidence-based double materiality assessment that would give a more accurate picture of the material topics for which they can basically take action on. Also, given that CSRD is also an organization, is a regulation which does not work in silo and requires integration and collaboration within the organization, unified data management is something which is of utmost importance, which a lot of companies have also highlighted, that given that the veracity and the depth of data requirements for CSRD necessitates that organizations work in tandem with each other and develop a unified data management so that they have a common access and standardized data collection and data management processes to provide the complete picture required by the requirements. Finally, given that organizations are wrapping up and integrating CSRD into their overall business strategy, they are also integrating the sustainability reports into existing reports, and also linking it to the existing other regulatory initiatives that they already undertake. So this basically gives us a quick overview of the key insights and key actionable insights for companies that are starting out now, and that gives a very high level understanding of how key areas the company should start focusing on. So like we see, expansion of value chain transparency, improvement of data quality and controls, and adoption of evidence-based DMA is something which has come out as one of the actionable insights that companies should definitely take into consideration when going into CSRD requirements. And given that CSRD is a very inclusive and integrated reporting, has inclusive and integrated reporting requirements, there is a requirement to align with the business strategy so that the sustainable initiatives and visions are aligned with the overall business strategy and is communicated well within the organization to enhance cross-department coordination. And like CSRD also provides a lot of phased-in options, and so companies should definitely make use of these provisions and ramp up their disclosures with time. So basically, the overall trends and strategic idea of the current reporting reports that we have already come up is that prioritizing integration, transparency, and structured data management is something that companies should definitely jump the bandwagon on, because that can basically these are the few steps that can basically turn CSRD compliance into a business advantage. So moving forward, so we based on our given that CSRD is going a lot beyond the basic reporting requirement, we have, based on our conversations with clients, and we have understood that there are a few key challenges that the companies are facing during the CSRD reporting processes. So given that CSRD requires organizations to integrate ESG deeply into their strategy, governance, and overall operations, it also presents challenges across various domains for the organizations. So few of the areas where organizations typically face challenges are around the areas of governance, data management, reporting, performance management, and communication. So let's just zoom in on quickly on each of the typical challenges that these organizations are facing currently. So based on our engagements and conversations with clients, we see that in terms of governance, because of integration and alignment across various departments, there is a lot of increased complexity in defining the roles and responsibilities for the data, as well as for managing targets and overall disclosure requirements. And there is also a lack of coordination because this is something that is new to the organization. So that is one of the major challenges that companies are currently facing. When it comes to data management, we see that given that the veracity of data that is required for CSRD, the data is required across the organizations, across different business units, basically across diverse sources. So there is a lack of standardized data collection methodology and also weak internal data controls, which basically makes it challenging for them to ensure that the data are up to date and aligned with the actuals, and not and how the proxies and everything calculations are being made. So overall, the complete process of data management is still at a very nascent stage. In general, in addition to these two factors, from a reporting standpoints as well, there are few challenges that the companies are still facing. So there are a lot of documentation gaps that we understand. A lot of people, a lot of companies are currently facing these challenges, which are making audits difficult and quite challenging for them to provide the overall data traceability which is required. And there is also a lack of preparedness, and there is also a bit of ambiguity in understanding the overall CSRD requirements, which makes it a little bit complex for organizations to actually completely comprehend and actually present and present the narratives in a manner that is aligned with the ESRS requirements. So that is also one of the major challenges which we see our clients struggling with. When it comes to the next part, which is on performance management, so when it comes to various targets and metrics that the organizations need to report as a part of ESRS, a lot of coordination again is required here as well, because of the dependency on multiple departments and data coming from multiple sources. And similarly, the target setting and target monitoring is also distributed across multiple stakeholders, which makes it a bit of a task in terms of the coordination, which is currently still the companies are still working through that. And also in terms of limited resources, the companies currently do not have that many resources for monitoring the KPIs. And to be honest, processes are still being framed to ensure that the targets are being set and monitored continuously, and to ensure alignment and amendment of the targets in an interim interim timelines are also maintained. So this, and finally, one of the major aspects that the companies that we understand are facing issues around communication. So CSRD, like we see, as we have been reiterating throughout our conversation, is that a lot of integration and collaboration across the departments and overall within the organization is something which is very important. So keeping that in mind, lack of internal awareness is something which is also something companies are currently facing challenges around. And one of the major challenges also is around engaging with the stakeholders and aligning them on the overall ESG strategy in line with the business sustainability visions that in line with the business strategy. So these are a few very diverse challenges across the organization, across different topics that currently the organizations are working through to comply with CSRD and to transform their overall reporting requirements. So we now that we have a little bit of idea on the key challenges that the organizations are currently facing, so keeping these challenges in mind, we have formulated a three-step approach which will help the organizations to ensure CSRD compliance, and while also optimizing their ESG reporting processes. So we have segregated this into three phases. So the first phase, which is on define and design, quickly summarize it is this phase is majorly focused on preparation for CSRD reporting. So during this phase, the focus would be on mapping the ESRS requirements, conducting DMA, double materiality assessment to identify the material topics, identifying the gaps to locate the key action areas that needs to be worked upon, defining the KPIs that the organizations need to define or update to align with the ESRS requirements, and ultimately develop a compliance roadmap and establish data flows, so that this would be the key action plan that they need to follow in the next step to start with, to ensure that the CSRD reporting is happening aligned with the timelines. So basically, to summarize, this step will, as a part of this step, the organizations, the key outcome as a part of this step would be a key set of action plans that the organizations need to take in the next phase for them to start reporting on CSRD. So now that we have now that the organizations are able to structure their action plans into a roadmap in accordance with their timelines, in the next phase, they would be operationalizing this action plan, operationalizing data collection, aligning with stakeholders, and they will need to identify the resources as well as timelines and prioritize these use cases to identify the key action areas that they would require to work on in order to align with the CSRD requirements. So this activity is something which will help them develop their first CSRD report. While taking care of all of these action plans, they should be able to, the companies will be able to develop their first CSRD report. Now that the companies, so based on our engagements with the clients, we see that a lot of companies, even though they have are also exploring on scaling up this CSRD reporting, and exploring the idea of how they can move from a more manual data collection and manual alignment with the stakeholders to a more integrated integrated approach where they can integrate various data platforms, ESG data providers, tools for them to simplify the data collection, computation, and overall processes, so that the CSRD reporting becomes a lot more seamless and and smooth in the upcoming years, because CSRD report is not something which is a one-time report that they need to do, right? They will need to continue doing it in the upcoming years. And again, the level of data and the quality of data will continue to improve with time, in requiring a more scalable data foundation that they would need to undertake. So one of the key steps in this, as a part of this step, would be to start integrating, identifying data platforms, tools, and data providers that can help them operationalize this further and scale the overall approach to ensure a more smoother transition to CSRD reporting. Finally, in the last step, now that if once the organizations have identified the key data providers, platforms, or any integrated their platforms, the next step would be to operationalize this and industrialize and optimize the overall processes. And this is how the organizations, so CSRD reporting is not the only report that the organizations need to disclose in upcoming times, right? The sustainability reporting will get, there are many other regulations also that the organizations will require to start disclosing on in the upcoming years. So the idea here is that keeping CSRD as a base, the organizations can actually also build foundations for accelerating the reporting, ESG reporting in general, and this could be a very good opportunity for organizations to build this foundation and go above and start preparing for a more comprehensive ESG reporting for the upcoming time. So this was a basic understanding of the few approaches, the three-step approach that the organizations can follow, to ensure they are complying with CSRD requirements. moving forward, like we have been discussing throughout this time, we see that CSRD is a very integrated reporting, which touches upon multiple departments and multiple areas within the business. Therefore, it therefore it is very important to actually create a data-driven operating model, which will help operationalize and streamline the roles, organizational operations, and overcome all the barriers that the organizations are facing while reporting for CSRD. So a data-driven CSRD reporting model will enhance governance, streamline reporting, and drive informed decision-making, which, like we already discussed, would accelerate the overall ESG transformation journey, which is the final aim for all of the organizations. So in order to achieve an CSRD aligned operating model, there are 5 areas that the organizations need to look into. So one is on operational processes, which basically, which basically focus on integrating sustainability into the business activities. So as a part of this section, the organizations would primarily focus on business strategy alignment, which will help them conduct a more evidence-based materiality assessments, develop a robust data collection, validation, and reporting systems, which will help them streamline the overall operational processes for the reporting. This is then supported by organization and governance, which basically aims at developing a clear structure and responsibility, and development of proper policies and steering governance that is required. That this will help organizations to establish clear ESG governance structure, assign responsibilities, and integrate sustainability into leadership decision making. And since all of the requirements needs to be constantly monitored, this will also entail leveraging any digital tools and automation to efficiently track the ESG data and track the progress over time. The last section, which is also one of the major important aspects that the organizations need to keep in mind while building an efficient CSRD reporting model, operating model, is on roles and skills and people and culture. So in order to achieve the level of integration and the quality of data that is required, it is also important to upskill the people in the organization, and also engage with the organization, engage with the stakeholders to clearly communicate the goals and vision on sustainability ideas. So all of these 5 areas are essential for creating a CSRD aligned operating model, and all of these different different areas are sitting on a bedrock of a strong sustainability data ecosystem and technology that will be a key enabler for key enablers for organizations to start streamlining their CSRD reporting and accelerate their overall sustainability transformation journey. So as we see already that CSRD provides a very structured path to a scalable and impactful sustainability transformation, and Omnibus serves as a very pivotal opportunity for organizations to realign the resources and establish the data foundations, which is essential for organizations to consider and scale up into the sustainability transformation that is the final goal. So keeping in mind the importance of data, we will quickly dive into one of this section where we actually want to explore how data is the key enabler for going beyond reporting. Because if we all see that reporting is not the end goal, right? The end goal is to actually act upon the data information that we have and identify the typical use cases that the organizations can then work towards and achieve their sustainability goals towards a low carbon economy. So we understand that we see that executives know the sustainability is no longer a regulatory topic. Rather, it is a medium of survival and resilience in the low carbon economy. to unlock the potential of sustainability as a business growth driver. Data, AI, and technology is a critical enabler to ensure an impact-driven growth narrative for the organizations. And this is also echoed through our current Slido that we currently went in, where organizations are still manually managing their data. And also this is echoed by the market statistics, where we see majority of organizations considering environmental sustainability as a top priority, with CXOs considering digital transformation as a prerequisite for sustainability. However, not many have actually ventured into taking the first steps in digitally led sustainable transformation. And this highlights a key gap in the market that needs to be addressed to reach the next step of the sustainable transformation journey. So taking a step back, we also we see that CSRD has quite a bit of comprehensive requirements, but we also can see that CSRD lays the groundwork for a robust, scalable, and future-ready data management. So CSRD is a key enabler, as we see, key enabler for a robust ESG data management, which will set the basis for scaling up the overall data foundations into the final level that the organizations would want to reach by standardizing reporting, enhancing data quality, integrating governance across the ESG data value chain. So some of the key CSRD requirements which drive a robust data management, quickly touching upon the few key requirements is within CSRD, which actually helps in setting up a more robust data management system, is via centralized and structured data collection. So standardized and entity-wide sustainability data collection, which reduces the inconsistency in reporting. Automated and auditable data systems. So traceable and verifiable data as a part of the requirements of CSRD ensures that the organizations have ensured that data traceability is in place and have developed auditable data systems. Similarly, ESG finance data integration or integration of ESG considerations into the financial data is one of the major aspects which helps organization, integrating the sustainability factors into and converting them into the financial implications for the organizations, and also understand the overall sustainability dependencies on the organization. Similarly, granular sector-specific data mapping helps in tracking the data aligned with the industry standards and ensuring the businesses accurately capture and report on the sustainability impacts. Similarly, monitoring and continuous improvement. So proactive compliance with CSRD updates and utilizing real-time ESG data, analytics, and dashboards can actually augment the ongoing assessment and performance tracking that the organization should undertake in order to align and see their progress towards the sustainability goals that they have defined. Similarly, regulatory alignment and standardization. So like we already understand that CSRD report is not the only report that the organizations need to be reporting on. They will need to upgrade their systems. They will need to scale up their systems to account for many other disclosures which also might come in the future. So alignment and standardization of data is essential because it will help organizations to future-proof their data management systems and plan and take on any other ESG disclosures or requirements that come our way in the future as well. So now that we have a little bit of idea on how CSRD provides a basis for the overall data foundations that the organizations need to establish, we will dive a little deeper on the key essential elements for the effective and scalable data management. So for an effective and scalable data management, organizations should focus on these four of these areas, which will help them, streamline their overall data management and ensure that they are setting a strong foundation for their organization, a strong data foundation for their organization. One of the areas is a unified data access. So one of the key requirements which will only be strengthened going forward is that data will be required across different areas, different diverse sources across different areas within the business. Therefore, the key area that needs to be key thing that should be focused upon is that ensuring data is available across geographies and across business functions. So some of the key steps that the organizations need to take under this is to identify all relevant data sources across business units and geography, and implementation of internal tools and controls for securing data flow and ensuring data quality. The next section that the organization should be focusing on data standardization and enrichment. So since the data would be coming from diverse areas, so there is a very important, very essential requirement to standardize these data points so that comparability and reliability can be maintained across business units, rather than diverse standards within the business units, creating more difficulty in aggregating the overall data. So one of the major things that the organization should be focusing on is to maintain comparability between the data points that are available across different business units and as well as centrally. So key steps that the organization should be taking in here is to align the data formats, taxonomies, and units for consistency and comparability, and integrate validation checks and data quality controls to ensure that the data which is finally coming after the computation is accurate and has a clear traceability to the source. The next section that the organization should actually be focusing is on granular data computation. So data computation with the high quality, as the organization starts aggregating high quality data, the data computation should also will also the results of the data computation, which is required as a part of ESG requirement, ESRS requirements, will also become more and more accurate. So the computing the ESG metrics and the most granular level is most important in this area, and using industry averages and other methodologies should be tailored to ESG metrics and should be circulated within the organization so that a consistent approach and methodology is in place. And the data again should be disaggregated at whatever level which is possible, and rule-based engines should be used to automate data processing at scale, rather than manually doing the overall process, which is already quite cumbersome and will become more and more cumbersome in the upcoming time. Using rule-based engines would be ideal for organizations to process the data at a large scale. Finally, final step that the organization's final element which the organization needs to consider is integrated reporting and steering, which basically focuses on integrating all the information and steering this report and monitoring this report and central reporting capacity, so that the organizations are constantly monitoring their report, monitoring their metrics, and tracking their trajectory and steering their business strategy up in accordance with the results and progress that they are making. And keep it with this information and with this trajectory tracking, that organizations will also be able to generate a data-driven recommendation, which will basically augment their operational transition plan and put them in the right path for the final goal that they want to achieve. Therefore, keeping all of these essential elements in mind, a robust management platform is something which is essential for industrialization and scaling the overall ESG capabilities, which is essential for, overall sustainability transformation that the organization should be focusing upon. So as we understand that reporting is not the end goal for the organizations, and the final goal is to eventually able to achieve and align with the low carbon economy that we are moving towards. So to unlock the value of your sustainability initiatives portfolio, scale data foundation and analytical layer are required. And this is not an IT, we have been talking a lot about technology and a lot of technical terms that we have put in here, but this is not a IT problem. Rather, it is a holistic operating model transformation with industrialization at its core. And the solution that we will be proposing here is a result of our client experiences and how we see our clients responding, and we see our clients coming to us with different use cases and challenges that they are facing. And the three steps that we would be focusing here is based on our real client experiences. So here the focus is we go from left to right, where the organizations should first start with defining the sustainability initiatives across operations and corporate functions. This should be aligned with the overall sustainability and net zero ambitions, ROI, and prioritization with the strategic business goals, which should be aligned to maximize value creation and supported by a holistic business case. So this is followed by a strong enablement using AI, Gen AI, which can add value through aspects like simulation, data analytics, proxy data, and or reporting narratives generation. So during our conversations with a few of our client engagements, we have also utilized this approach, and we have encountered a few use cases where we have helped our clients. We have helped our clients with the CSRD requirements using Gen AI solutions. One such use case, if I were to mention here, is around reporting generation, narrative generation. How we have helped our clients is that we understand that CSRD requires alignment across multiple data points, multiple information across multiple departments. So Gen AI comes in here with a very well-placed value proposition, where we can feed into Gen AI a lot of information and key policies and key information across different departments, which it can then utilize and come up with a sound and comprehensive narratives based on all the data, qualitative and quantitative data that is fed into the solution. And what it does is it helps providing a very comprehensive narrative, which would be very much aligned with the requirements of CSRD, qualitative, a few of the CSRD qualitative data points, which can then be used by companies as a base and then built upon as per the requirements. So we see that this is one of the many use cases that the organizations have. How Gen AI is how organizations and how we have helped our clients in utilizing Gen AI to streamline the CSRD reporting. And as we go through the next section on the case studies, we will build up on this a little bit more and provide more details on the overall approach that we followed here. Finally, as we see that building an automated end-to-end ESG data ecosystem to collect, consolidate, and structure the data across the whole organization is sets the base and sets the right foundations to industrialize and scale all the requirements, and finally achieve the overall sustainability goals that the organizations are eventually aiming to. So keeping this in mind, we will, I will now request Marie-Therese to take over and give a little bit more insights into how we have, used this frameworks and approaches to help our clients to structure and industrialize the CSRD reporting. Marie-Therese, over to you.
Perfect. Thank you, Pallavi. And yes, also hello from my side. I'm happy to walk you through some of our project use cases. And I also saw in the chat that there were a couple of practical questions in terms of how does it work with the auditing. And I hope I can also clarify some of the questions through our case studies. So if we go over to the next slide, please, then I would first of all give you a short introduction on two particular use cases that we have picked for that session as examples on how the clients and we within the project have dealt in working on the different requirements posed by the CSRD and also how the clients dealt with the omnibus development. So two use cases for today that are similar in the number of tasks that we completed, but also differ in some instances. So short introduction, let's get started with the technology company. So here we were asked to support the client in preparing and implementing the CSRD requirements. So we are working with the client since already 10 months now, and it is also a wave 2 entity. So pre-omnibus, the client would be obliged to issue the report Q1 next year. So what we did is that we already prepared the current sustainability report that gets published in a couple of days to use it as a draft report, to not aim for 100% ESRS compliant report, but to incorporate as many of the ESRS requirements that are already in place and where the quality is pretty good. And most importantly, also to trial run the audit procedure, because for that particular client, it is the first time that they went through an actual ESG audit. So of course they had the financial audit previously, but never an ESG audit. So for many of the for the stakeholders and function, it was pretty new to understand what actually is an audit, what is required, what do you need to provide. I also go into that a bit deeper on the next slide then, but we also accompanied the client in going through this audit process to understand what is required, what are the different process steps, and then we also did, of course, some CSRD preparation work. So we did a DMA refinement, we did the gap analysis together with the client, and then based on the number of gaps determined, we selected some ESRS implementation projects the client should focus upon in the next couple of months and next year, to make sure that now not by 26, but by 27, 28, the company is reporting ready. And also interesting in that case, so it's a company that is based in Germany, and they have decided that they will continue with the efforts on working on the CSRD implementation, because they really see it as additional time giving to really strategically think about what needs to be implemented, where are the real gaps, and not to really rush and put everything into the next 6 to 7 months to pull a ESRS compliant report together. So to give them also a bit more time to think strategically on their set targets and how they can achieve it. And this would be also my strong recommendation if you are a wave 2 entity, and if you have already started and working on the CSRD reporting, you have probably created different work streams, you engaged already many stakeholders internally, and that you keep up the momentum that you've created, and try to finalize projects that you have currently ongoing, and that you give your company a bit more structure in terms of how will reporting look in 2 years, what are the key initiatives you would like to focus on across the ESG dimension, and what you have determined as being material to you as a company. So the idea is definitely not to stop the activities or to put everything on the side and then pick it up in like half a year or a year, because that would definitely not you would definitely not use the time wisely, so to say. Of course, there's less pressure now on providing all the information already by next year, but still the EFRAG will revise the ESRS standards as we have heard, but they will still focus on the quantitative requirements. So they will rework maybe the qualitative ones, but the quantitative ones are planned to be maintained. And often the data is where we see the biggest challenges. So the advice would be to really keep on with the work that has been initiated. And then briefly on the other case study in the pharmaceutical sector. So that's a company based in Switzerland, and that's also an interesting case because compared to our other case in Germany, this particular client has already, for example, reporting obliged entities in France and Italy, and that also means here in these countries the CSRD is already transposed into national law, meaning the client has decided to do as the group company or the mother company to prepare the group report, and so they cannot just drop all the ongoing initiatives, and they also have to fulfill Swiss law. So it's also important to really strategically think and do a risk-based analysis of the entities that you're covering. What are the local requirements, and then also closely monitor what happens with the regulation that is already transposed. So is it going to be adapted? Is it also postponed? So that's also something you need to closely monitor when you find yourself in the same situation. With this particular client, we had a very, very strong focus on the DMA because, as you know, the DMA is the biggest lever that you have to really narrow down your reporting scope, to really decide what's material for you as a company, but also for your stakeholders. And so we spend a lot of time on revising and discussing the different IRA statements to really see where the impacts, the risks, and the opportunities lie. And what also differs between the two projects is that in the technology project, we did the report writing by ourselves with the help of AI. But in the other project, the idea was rather to prepare data templates and reporting templates as best as possible so that the functions themselves also get in charge of doing the actual report creation. So that's also a different way how you can approach the report creation. So you can say, as one department, being at the finance or the sustainability department, to say, we are in charge of drafting the whole thing and we're getting input from our functions. Or you say you hand over the work and the responsibilities to the functions and you then consolidate it as a sustainability or finance department, wherever your report responsibility lies. So maybe that's to set a bit of the scene in terms of the two use cases. And what I would like to focus on the next slide is a bit of the kind of key challenges that we've encountered, not only for these projects, but also through several other projects that we did in the past months. So to focus a bit on key challenges that we've encountered. So on the left-hand side at the top, it's consider your CSRD big picture. And what I mean by that is, of course, functions have different strategies, they have different targets, ambitions, and so on. But the report, as a progress report, will bring it together. And the kind of North Star is the DMA result that determines what you need to focus on. And then the different chapters, they have to build upon this materiality picture and the overarching holistic ESG strategy that you have implemented. And so it's really important that even though you speak about individual topics within your sustainability statement, it all has to tie and link together in the end. So keeping the overarching CSRD vision or ESG vision in mind, and then also ask yourself, how does it link to your company strategy? So is ESG just a pillar within your strategy, or is ESG your overarching company strategy? So that's also a question that you have to ask yourself if you write the report. And the second challenge that we see is the understanding the interpretation of the meaning of the ESRS, because, as you know, the ESRS are sector agnostic, meaning they can be applied by a pharma company, by a banking company, or by a tech company. And you have to narrow down what the ESRS actually mean for you, for your business model. and that takes time. And often, of course, the functions are not ESG reporting experts, but they are experts in their particular fields. So it is really important to spend a lot of time on understanding what do the ESRS mean for us, which information do we have in place, and you need to plan enough time for this analysis. And that leads to the third point, which is the budget planning. So in all of the projects that we have worked so far, no one really accounted for implementation budget on ESRS topics, because of course, on the one hand side, the sustainability team that is primarily responsible for pulling the report together, or maybe together also with the finance accounting department. Of course, they have planned for budget because they ask consultants to support DMA, gap analysis, and so on. But when it comes now to the actual implementation, and that's where companies will now focus on in the next 1.5 years, you need to plan budget to say, okay, we need a software, we need data, we need consultants to support us in a particular strategy development, whatever it will be, but you need to plan the budget ahead. And in most companies, budget processes start around summer or early autumn time this year. And that's something where you really need to have a clear picture also for next year. If you say, well, we will continue working on the ESRS and the implementation, that you plan forward with the budgeting, so that you can ensure that you can cover also the different requirements. Of course, it is a bit tricky when we look into the timeline of the EU to say that the ESRS standards get revised by end of October, and the first draft will be published. But as I said, the quantitative requirements will remain. It's more about the voluntary and the qualitative pieces, and also the phased-in options, right? So this is also something where we could put a little question mark around how the EU will work around the phased-in options that you, for example, have for the climate risks or the anticipated financial effects around these types of risks. On the other hand, what we also see is that within larger companies, different departments run different initiatives on ESG that contribute to the same topic. So for example, if you take carbon offsetting or carbon accounting, then there are different functions that do different things, but they do not communicate with each other. So it's really important to have a clear picture on what is going on within your department, within your company, especially if you're working on the topic from a more holistic point of view, so that you make sure that resources are used as efficiently as possible. And then there was also a question, I think, in the chat on the data piece. So what we see is that data often gets manually calculated. And I think that's what was also the majority of the audience answering in the poll, that various systems are used, especially for consolidation and calculation, and that there is a lack of transparency on the different systems, on also, yeah, there is a strong dependency, right, also on who is providing the data, especially in the upstream value chain, where you have different actors that provide you with data. So the question is how to best get your way around to receive real data, or how to work with estimations, maybe with publicly available data. So that's also something that ties to ESG data management, where you need to see where your biggest gaps are that need to be resolved in short time. And then you have the audit exposure. I addressed it already in the beginning. So most of you have never been engaged maybe in an ESG audit beforehand. So that really takes quite a lot of time. So for those of you who have not been in touch with an auditor so far, so a normal audit for a sustainability report would take around 4 to 5 months, depending on the number of material topics that you have identified. And it will start with general text audit of the report you prepared. You have a data audit. You have different interviews. Auditors are doing process walkthroughs. So to understand how you collect data, which controls do you have in place. So it's for them really to understand the front to back end, how data and information is collected. So it's really an intensive process, and they ask also for a lot of approved documents as well. So it needs to be bear in mind that this also accounts for quite a lot of time when you do the time planning for the report creation. So maybe that's a bit on the challenges, and then I would like to deep dive a bit on how we are now helping companies in kind of accelerating in this process. And with our tech company, we used our Gen AI own tool that helps in creating a sustainability report. So that is technically using what you have pre-prepared in the initial preparation stages. So taking the DMA assessment, taking your gap analysis, the respective ESRS data requirements are mapped so that the tool clearly knows what needs to be reported. And then we feed the tool with all the information that we collected. So being it policies, guidelines, process documents, additional other reports that get prepared that are maybe not publicly available, but that can be used as an information source to enrich the tool and the report creation or the chapter creation with as much information as possible. And then we run the tool, and then it creates different narratives that then need to be pulled together into a report. And especially at stage 4, the work between the tool but also manual work gets interesting, because at some stage, of course, you have to refine the prompts within the tool to make it also client specific, or to narrow it down to achieve the result that you want. We normally often do that also with pilot runs, so that clients see, okay, how does that work, and is it something that I can incorporate into my daily work? And we just did it also with our former client, and they were quite surprised on how quickly we were actually able to prepare a good quality chapter in roughly a week. So if you have all the information in place, of course, that also takes some time to do the pre-work. But if the pre-work is in place and in good quality, then such a tool can really accelerate the number of days and hours your functions spend on doing the actual report writing, because they could then spend more time on refining the drafts. And the tool also maps the different sources where information is coming from, which definitely helps you also then within an audit when the auditor is requesting proof documents for the text that has been written. And within the tool, you could also visualize the progress status, right? So where you are in terms of the report finalization. So that gives you a good overview where you stand and the degree of the completion. So this is something where you can accelerate, or where we accelerate time and resources. And another aspect, if we go to the final slide on the case studies, is the definition of data product. So that ties more to the direction of ESG data management. So in the general process structure as visualized above, you first, of course, acquire, define the data you collected, you then analyze and consolidate it, and then it comes to the visualization and consumption part, which is then more of the reporting piece that comes at the very end. But what is actually the main part is to understand also which different regulations you need to cover. So maybe you have to fulfill the European deforestation regulation, you have to fulfill CBAM or CSRD, and there's also CSRD, and they all require to some extent maybe the same or comparable amounts of data. And for that, it is quite helpful. So we have identified that for us as being helpful, and also for the clients, to define data products that serve multiple use cases, so that a data product is always like a bunch of KPIs. So it's not only one KPI, for example, the total Scope 3 emissions, but it is a bundle of KPIs that serves different use cases. So for CSRD reporting, but maybe also for reporting on your GHG inventory in other cases, or to fulfill, for example, also rating requirements. And then you need to define the data product along different objectives, your operational environment, and also if you have any policy or compliance restrictions. And what it basically does is that it gives you a faster access and an overview. It limits Excel chaos that you might have, and it also functions as a single source of truth so that it can be shared and easily integrated into management software that you, for example, using. And it is also easier than if you collaborate on different bundles with different functions. So this is something that we have identified as being quite helpful when actually understanding which type of data is required, what needs to be collected, and which different use cases can we then also fulfill, so that we do not have to extract every single requirement from the different regulations and then see which type of data that we need, because in most cases, same data is needed, maybe in some different variances or nuances, but the use case per se remains the same. And it is then the result would be a environmental or a social KPI data catalog where you have different bundles of KPIs, where you then need to map the right data and see where data originates. And that really also helps in introducing or showcasing the gaps that you have when it comes to data availability, data quality, and also the controls that you need to have in place to ensure that the data quality is maintained or even improved. So I hope that was helpful in giving a bit of an overview of how we are dealing with these topics in practical terms. And with that, I would hand over to you, Pranav, to walk us through the key takeaways of these 1.5 hours of introduction.
Yes, perfect. Thanks. Thank you, Martharis. Yeah, just want to quickly summarize our key takeaways before we open the floor and start with the Q&As. So yeah, you can go to the next slide. Yes. CSRD, as we have discussed, is more of an opportunity for really a holistic sustainability transformation and value generation than basically just a regulatory burden. So although there is a lot of tectonic regulatory shift that is happening around CSRD regulations, the regulation itself stays true to its essence, which is recognizing that companies don't operate in a vacuum, but are influenced by and interact with their external environment and society. So with CSRD, companies have an opportunity to actually define clear goals, set priorities for holistic sustainability transformation to generate long-term value that can strengthen the business resilience. So that's the first key takeaway, as I would say. The second one would be it's important to interpret omnibus package. While the omnibus package introduces several adjustments to reduce the administrative burden, companies should seize this as an opportunity to take the time which has been provided to improve their ESG data systems, increase reporting efficiencies, and optimize the Office of Sustainability. So you reduce your compliance costs and burdens whenever the reporting will start and kick in. Moving on to the third key takeaway is to unlock, as I mentioned, the full potential of sustainable transformation requires the breaking down of silos. So ESG is not just about ambitions, regulations, or compliance, or it's not an IT problem. The focus should be on establishing a robust operating model across people, process, data, and technology to accelerate and scale the sustainable transformation. To be prepared not only to meet the regulatory expectations in the short term, but also to increase resilience and unlock long-term competitive advantages with this. So with setting up these operating systems, it will always benefit not just for reporting, but also for other allied activities and for mainly business prioritization and growth. And finally, the final takeaway is, as we discussed, harnessing the potential of data, AI, and technology is critical to streamline ESG reporting, but also to move beyond reporting. So these things like AI, Gen AI, agentic AI that we are seeing built on top of a strong data foundation will help in industrializing, automating, and scaling the sustainability objectives, data collection, and their impacts also. So because a lot of data is coming in, which as we discussed is still manual. So to really unlock the true efficiencies, industrialization and automation would be the key, where companies have a quarterly view, at least monthly view of this data, and are driving their business goals with these tools, technology and AI. So that's the main key takeaways. Yeah, I'd like to hand it over to you, Finn, for Q&A section.
Splendid. Thank you, all three of you. Thank you ever so much. Excuse me, really insightful. We've had a lot of questions coming through, and so we have reached the time where we're going to start putting those some of those questions over to you. Do get them in now quick. I've kind of, just to keep a bit of format and structure, I've kind of tried to group some of the questions into 5 headed areas that I'd like to cover off with you. And so want to just really revisit briefly the crossover for the UK, implications for the UK, and some other reporting frameworks, and then maybe move over to risk of non-compliance, then perhaps look at some of the challenges that Pallavi touched on with an emphasis on the data piece, maybe move over to just scope 3 materiality, and then end just with future outlook, future considerations, if that's okay. So we had a question through, going back to that first point then, to do with the UK and other frameworks. There was a question which was answered live, so I will just read that out for anyone who didn't see that. And the question was from Estelle, which was, as CSRD is an EU regulation, what is the UK position? Will the UK decide to comply as well? How and when? And that was answered live by Satu, who said that UK companies are considered non-EU entities under CSRD, and applicability depends on factors such as whether they're listed on EU regulated markets, have subsidiaries or branches in the EU, and whether they meet the other criteria. But I just wanted to know if any of you just wanted to add briefly on that, just for our audience, many of whom are actually going to be in the UK today.
Yeah, so yeah, as I discussed that UK is also for the EU CSRD, the UK will be in the Wave 4 category. The UK listed entities operating out of EU might be in the Wave 2, Wave 3, or Wave 4. So it will really depend on taking a look at what is your applicability, and that's when we'll have to start your reporting. And in terms of the UK government's plans to implement a similar thing, such as CSRD, that we covered, which was UK has something called the UK SDS, which is still under discussions and which might be endorsed by mid of 2025. After that, we'll have much more clarity on this.
Adam Mann actually did ask how they'll align. I know that you put an answer in there. I wonder whether you wouldn't mind expanding on that for anyone who didn't see that answer. Just in terms of how they're going to assess and endorse the ISSB disclosure standards.
Yes. So again, these are still being discussed. So Financial Conduct Authority, which is the FCA, is expected to review the UK government's official stance on the International Sustainability Standards Board directive. So ISSB is a similar framework as to GRI, as to sustainability, SASB in US or others. So it's more international and global. So UK government is looking at that framework to inform and build on their own sustainability directive. And once the Financial Conduct Authority is comfortable and has sufficient deliberations, then they will start discussions around mandating it for at least a similar wave structure could be followed, is what we can expect from the CSRD, which is UK might also have a waved approach where first priority would be to get listed entities to report.
And in terms of So we've got a question here, just I suppose the crossover with CSRD with other frameworks then. So it'd be a question here from anonymous attendee, just saying it would be great if you could point to the different sustainability reporting overlaps and how to eradicate double reporting. So it'd be great, and whether there's they sort of continue here that potentially, do maybe some that do a bit more than the CSRD if required. And are there any cases where that's happened?
Yes, so right now that's the case, which is companies have to publish multiple reports across, for example, if a company is in consumer products, they have to do CSRD, the CS2D might be in focus, some aspects of UDR, which is deforestation regulation, and there are these other regulations that are applicable for these companies. So there are all of these regulations which a company is typically reporting on. A lot of the times, and that's why the push that we are doing is more on leveraging AI, data, and standardization of data and ecosystem, which will help in addressing these multiple reports, because the underlying data would be more or less very similar in terms of how the requirements of CSRD are versus what are the a subset of that similar reporting requirements would be for some other regulations. So if you have built robust data foundations to automate the whole data collection, reporting processes, then you can parallelly address a lot of these regulations.
Well, that's a good point then. So that actually leads, if we just jump to kind of some of the challenges then, which are around, which Pallavi touched on in your presentation around gathering data. And there was a question, I'll see if I can find it here, just around, someone, I know you touched on the importance of effective data management, kind of end-to-end systems. But what about people who aren't using those at the moment? How can they ensure that they're going to comply?
So obviously, the companies who are currently not using that, but the main goal would be to first step, build the foundations, build, step by step, build a more standardized data collection process, put a more, structured, establish structured roles and responsibilities, and basically start with building a more, structured processes in place, which would initiate, which will start the first level of, which will set the foundation for, collecting the data, operationalizing all the items, aligning with stakeholders. That would be the first step. And building up on, a scalable data management would be the next step. The first step obviously would be to set the foundation, start, identifying key areas and key processes that the organizations need to, take on, and then build on top of it, and build on top of those foundations and scale it further by establishing data management. So a lot of organizations, most of the organization obviously did not start with a available data management system, right? So they already also started, moved slowly from a manual data collection, a more siloed organizational processes to a more structured and more foundational approach was first set, and then the overall data management is something that can be approached post that.
Right, because interestingly, the Slido that you put up at the beginning, so the results of that poll are back now, and actually 66% of our attendees manually collect at the moment, and I think 31% have said that they've partnered with an ESG data tool vendor, and just 3% have that end-to-end automated ESG data management system. So it'd be interesting, perhaps, I don't know if we'd have time to cover it today, but just in terms of actually the benefits of that end-to-end system, and in terms of return on investment of that. And that might be a good way to actually flow into the next one of the other challenges you mentioned, Pallavi, which is around actually stakeholder engagement and some of the benefits you touched on just in touch of actually compliance, how it non-compliance, what the impacts are for stakeholders, and how compliance can lead to resilience and business growth. So I suppose there's a couple of questions there just about what are the risks of non-compliance, and then how to actually get that stakeholder engagement to actually ensure that they have the systems in place to comply.
So in case, so if you're so let's break it down into two parts. The first, maybe I can address on the risks of non-compliance. So in case of non-compliance, there are a lot of financial repercussions and reputational damages that the organization can be facing as a result of non-compliance with the regulation. Exact quantification will obviously differ based on the organization and the overall amount of the breadth of the business operations that organization have, but definitely the implications in terms of financial implications and overall industrial reputation implications is major enough to steer the organizations in a direction that they should be taking this seriously and taking effective steps in moving forward. The next bit is where so the next part of the question, which is around the stakeholder engagement bit. Since a sustainability cannot be approached in a silo manner, all the stakeholders needs to be engaged. So this could be done through effective communication, communication across the organization, communicating with them the overall sustainability vision, actually taking in their aspects and understanding their challenges on what sort of challenges they would be facing in case they were to integrate these factors into their decision making and overall production or operational basis. So it is a bit of a initially it would take a lot of effort, but all in good sense, it would eventually lead to a more aligned and more alignment in terms of internal understanding of the overall business strategy the organization should be following.
Terrific, thank you. We have officially reached the end. We have still got a number of people in the room. So unless you have to leave, a couple more questions would be great, guys. Just maybe around the scope 3 element of it, and if you could just go into maybe answer a question just around materiality, particularly given our audience, Mobility Ways focus area on a very distinct area of scope 3 of commuting. But if you could just give some info broadly about scope 3 materiality. We've got a number of questions related to that in the chat box.
Yeah, I can take that up. So scope 3 materiality really focuses on identifying and prioritizing the most relevant GHG emissions within the organization's value chain, either upstream, downstream, for disclosure and reduction of the efforts. So disclosure is just one of the ways, but the main focus should be on reducing the GHG emissions across the value chain. And there are total 15 scope 3 categories, ranging right from purchased goods, raw materials, to transportation, to business travel, which Mobility Ways is focusing around, to even investments by various financial services companies. So really the focus should be on identifying what you're doing a hotspot analysis of where maximum emissions lie across your 15 categories. And then tackling and identifying and tackling those issues and focusing on which are the short-term priorities versus which are medium-term and long-term to reduce the emissions.
Fantastic. And we are slightly overrunning, so I've just got one more question, because there's a lot of questions around AI here, and in terms of I suppose that we can kind of lump that into future considerations as AI develops at such a rapid pace. So just a couple of final questions here, just around the impacts of AI, and there was one just around the actually the impacts on the environment of the AI and of AI, and actually what place that's going to play in reporting as well. And then maybe just if you could conclude, so again a bit of a two-parter, just with where you see the transition of CSRD over future years, and then finally just actually whether or not CSRD is going to have an impact on net zero sustainability targets. So a bit of a three-parter for you there.
Yeah, so maybe I can, unfortunately my camera is not working, so excuse for that, but maybe I can pick up on like the future outlook and AI per se. So of course, when it comes to the usage of AI, it's also about considering ethical standards on the one hand side. So I mean, of course, the environmental aspect also plays a role. However, I mean, I think at the moment is not yet clear how to really account for that into your scope emissions. So I think that's a discussion where regulatory requirements have not yet really put a particular focus on. But when it comes to the ethical part, I think it really also depends on for which kind of use case you are using AI. So when it's just for report creation, for example, it's not that you replace your valued resources internally, but it's making or giving yourself more time to spend the time on really doing or creating value or value for your company and the report in the end, and focusing more time on actual implementation and spending time on the ESG reporting itself. So I think it's a differentiation between using AI to replace resources, for example, or using AI to accelerate your processes internally. Also, it could help you, for example, in forecasting or estimating resource consumption, for example, in your up or downstream value chain. So things where we as individuals not would have the capability or even not the time to do individual analysis, AI could be of real help. So I think you have to have a look at on a use case basis. And when it comes to the CSRD outlook, so I would say, I mean, from the clients I'm working with, many in the first week of Omnibus in February were like, okay, now easy one, we can stop CSRD. And then 1-2 weeks later, they realized, oh, well, we cannot do it because it still remains. It's just a timeline postponement. But you need to ensure and look at the gaps that you have, right? And then make sure that you implement and fulfill these gaps and use the time wisely that you have. So it gives us all a bit more time to look into it, not just from a reporting point of view, but also come back to what is really important in terms of reaching your targets, think about your environmental or social impact, and really work on what ESG is about, and like contributing to planet and people, and not just see it as a reporting activity only, because yes, it is a progress report in the end, but progress is only made if you put effort and time into it, and that gives companies more time to think about it more strategically. So that would be my point of view.
Thank you. Well, we did have a number more questions. I think you guys have been extremely generous with your time, and we have overrun. So I think now might be a good place to wrap it up. Thank you ever so much. It's been great. This video, actually, one question we did have from a lot of people is, will the slides be available after this? And yes, they will. And I believe your contact details are on that. So actually, if you want to get in touch with Capgemini, any of our panel today for a conversation about how they might be able to assist you on your CSRD journey, then please do get in touch. That concludes this webinar. Just a quick plug for the ZC3, which is Zero Carbon Commuting Conference, Mobility Ways annual conference, coming up, as you can see there, on the 15th of May. And we have a keynote from Professor Mike Berners-Lee, where we'll be giving away free copies of his latest book, A Climate of Truth, to participants in that event. So for more details, please do go onto the Mobility Ways website. And if you're signed up for our newsletter and invitations to future sessions, you will get a registration link. So that just leaves me to say thank you again. Thank you for our audience for your time today. Hope it's been a valuable session. It will be available on our YouTube channel later today or tomorrow morning. So if you missed anything, want to watch it back again, share it with colleagues, I'd encourage you to go onto the Mobility Ways YouTube channel. Thank you all very much. And I think that's probably lunchtime for a lot of people. So enjoy your afternoon.
Thank you.